Jason here from Fix My Books. Canada exit taxes. Oh, this is a nice one. Can I still contribute to my RRSP or TFSA after leaving? Yes and no, and kind of maybe. So RRSP contributions are eligible for non-residents. So while you're abroad, you are allowed to keep contributing to RRSP. But you may be limited with that because your contribution room is generally not going to grow. So very likely it's not going to grow. And so you're only going to be able to contribute up to what you actually have left in contribution room. And since you're a non-resident, you probably won't have any Canadian taxable income, you can't utilize the RSP tax deduction until you file a tax return again when you move back to Canada. So any contributions that you're going to make while you're a non-resident, generally just going to be carried forward until they're deducted in a future year if you re-establish your Canadian tax residency. So there's going to be no new room. You won't earn any new RSP room without any Canadian sourced earned income. So if you aren't working in Canada, your RSP room is generally going to stay unchanged. Limited tax benefits, so contributing as a non-resident isn't going to be really advantageous to you because you can't deduct it against Canadian income right away. So you're basically putting money into something that you're not going to get a benefit from unless, the assets that you're investing in are going to grow at a faster rate than where else you could use the money. So many expats are just generally going to hold off on new RSP contributions while they live abroad. They may start to, if they're thinking they're going to return to Canada, plan ahead and start contributing the year before that they come. But if you have immediate cash needs, you're probably not going to contribute. And then also TFSAs. So there are restrictions for TFSAs owned by non-residents. So if you become a non-resident, you really can't contribute to your TFSA account anymore. I mean, you can if you really want to, but you're going to be penalized for that. So there is a 1% per month tax on any contributions made to a TFSA while you're a non-resident until those contributions are withdrawn. You can keep the account, you don't have to close it, and it does maintain its tax-free status on all the income in the account. But just be aware that that tax-free status, that's applicable to Canada. It may not be applicable into a country that you move to. They may look at that account not in the same light as a registered retirement account like Canada does. And so they may tax it. You also have to factor in the fact that you have withholding taxes. So if you're withdrawing from RSPs overseas, you're going to be hit with a 25% withholding tax. However, this can be reduced by using tax treaties, and you can have advantageous rates, so 15% withholding tax rates, and then using tax credits to offset that, foreign tax credits to offset that. So there's really no need to collapse the RRSP and close it before you leave Canada. And you can still contribute to it if you want to, but it's not that advantageous. And TFSAs, like I said before, you have to be careful with this one because other countries may not recognize this in the same light as Canada does, which means that you may have reporting requirements on it, you may have even tax on it, even though you're not withdrawing anything. So you really have to check the country that you're moving to and check the tax treaty to see if there's any implications on any contributions and withdrawals. So this applies to both. So from the Canada side, you don't really need to worry about it that much. Just don't contribute to it. But you may want to think about, where you're moving to and plan ahead with that respect. So if you need any help with this, please feel free to reach out. My name is Jason from Fix My Books. And if you know anyone in this situation, please feel free to share this video with them. And don't forget to like and subscribe. Thank you.